Hi, this is Pete Birchler from Stock Market Alchemy Blogspot. It's Tuesday morning, March 17th, and was just going to give a brief update here on the U.S. stock market, some sentiment measures, and I think a potential pattern that's at play here. So first off, what I want to look at here, let's actually go to that and look at the sentiment first, because I think that's going to be kind of instructive of why I think there's going to be a bounce here, probably at least one more bounce. So first thing I'll show, I've showed this chart many times over the last few years. This blue line here is like a one standard deviation band around the total put call ratio, and the pink line is a 5-day moving average, and the pink line just poked outside of both the darker blue band here, and you can see some other times in green where that's been highlighted. So first week of August 2014, first week of October 2014, and first week of July 2014. And we just saw that again here, and so let's put a little circle around that, indicating that we have kind of a setup or an indication that at least for the short term, the market may be stretched to the downside. And so what we're seeing is that put-call ratio rise, indicating a relative increase in fear given the recent trend in the market. And the pink line is also outside of this light blue longer-term standard deviation band as well. So that's an indication here that the recent sell-off has sparked a little fear in the market. And the ratio, 5-day ratio, is the highest it's been since October, shortly after the bottom of that major correction. So probably a legitimate chance for the market to bounce here. Looking at a little bit different version, this is a 7-day moving average in pink, and then a little bit different standard deviation band configuration, but we also see that 7-day average in the total put call ratio. The only time it got as high as that in the last couple years was in October, right at the bottom of that correction, the significant correction in October, and then we saw that happen in June of 2013, which if we look over to a chart of SPY here in June of 2013, the ratio got elevated right in this area, actually right before a final little plunge that put in kind of a spike low and led to a rally. And then the other time we saw that occur was right down in this area, right towards this October low. Both times very good times to buy, and we saw the market push to new highs. So that's some of the sentiment backdrop there. And I posted this chart on the blog as well a couple of days ago, showing a shorter term view of the VIX, but a similar type of idea here, in that we see the VIX, and this is an hourly chart, so this is a little bit shorter term, but the VIX outside this upper light blue line, and the dark blue line here actually outside of the upper blue line as well. So we have the VIX kind of at a relative extreme, and the Bollinger Bands or the deviation bands, shorter term expanding above the longer term, which is oftentimes will coincide with a spike in the VIX that just slightly precedes a market low, and thus far we have seen a bounce since I highlighted that a few days ago. So I think the sentiment backdrop is here for at least a short-term bounce in stocks. We have the FOMC meeting today and the announcement tomorrow, so probably going to see some quiet market action at least into tomorrow afternoon for the most part. What happens after that, don't know for sure. I have two ideas of what will happen I'll talk about here. So first off, let me just show kind of where I think we're at potentially from a pattern standpoint. This past week I view as a potential just kind of a shorter term cycle low, with the next shorter term cycle peak probably being right at the end of the month or early April. And so what I think is probably happening here is we'll probably see generally upside prices, whether it fails to make a new high or whether it actually does make a new high. I think we'll see generally sideways to up price action for the next couple weeks here, probably about the next 2 weeks of time. And what I kind of wanted to do educationally here, if you can call it that, in terms of looking at patterns in the market, is maybe more offering a perspective on pattern analysis as opposed to educating, because there can be a fair amount of subjectivity in looking at patterns in the market. And so what I'm going to suggest here is that if you do not have an objective, some simple, consistent, objective rules, that your pattern analysis will not be useful and maybe somewhat of a fool's game. So one of the rules that I think is actually viable in the market is to determine the starting point or the ending point of a prior pattern, that you confirm that is logically the case when a new move in the market completely retraces a prior market move in less time than it took to form. Once you have at least a three-step pattern. So the minimum pattern in a market is 3 steps. So you can't have a pattern that's less than like a down, up, down, or up, down, up. Otherwise you just have a line, basically. And so what we're looking at on this chart here is a potential down, up, down pattern into the October low. And if we look at the September high here and just drag from high to low, just a simple time band, and then let's kind of zoom in here. So again, looking at this high to this low here, this line at number 2 would show the time projection forward from the October low, and we can see that price actually came back and completely retraced this relatively dramatic downward move prior to that time band being hit. So we absolutely, objectively, no argument, no subjectivity, know that this move back up from low to the peak here was more powerful. It had a higher rate of gain, and was therefore logically indicated that something completed there and a new directional phase of market move had begun. So without getting into real longer term patterns or anything here and trying to look at too much time frame and get too complex, if we just identify that from a shorter term cycle standpoint and pattern standpoint, market psychology, whatever you want to think of that, that appeared to be the completion of something, and this leg up was the first phase of now a new upwards pattern in the market. What could be developing here? Well, if we just simply look at trend lines, we have kind of a clear kind of upper boundary line here connecting these points, and given that we're seeing sentiment spike here and looking like the market's going to rally, but on a longer term basis seeing all kinds of signs of optimism and bearish divergence in the market, potentially even looking for a bull market top here, if we view this as potentially another independent move down in a developing pattern, we could be looking at kind of a contracting pattern here, where we have the widest leg here, we have a consolidation, now we have another upward pattern here that is smaller, another consolidation, and then an even smaller upwards pattern. So in wave theory or Elliott wave parlance, this would be a ending diagonal or a contracting triangle type of a pattern, a rising wedge type of a pattern. And typically the resolution, certainly a classic resolution to a rising wedge, is a downward break, and certainly for a ending diagonal or terminal impulse pattern in Elliott wave terms, that pattern is very significant because it indicates that not just that a pattern completed, but that a pattern of a larger degree completed, meaning that this is probably not just ending this pattern here, this is probably ending a larger phase of market action, with the indication that the reaction will probably be correspondingly larger. And I think from a trading standpoint, while this would be somewhat speculative at this point, but certainly if we do see it hold to this general structure here, I think it would be worth making an option play on a breakout above this high here that labeled point C. Let's say price touches or breaks out above this high and then forms a bearish type of reversal candlestick concurrent with some technical divergence. One could either initiate a short or inverse position there, or make a speculative option play with somewhere an at the money or slightly out of the money put option. And here's the I think potential of this, in that a ending diagonal pattern like this, if that is what occurs here, will typically be completely retraced in a relatively short period of time. Relatively meaning oftentimes a quarter to a half of the time that the whole thing took from high to low. So let's just say that the pattern completes right where I have it labeled. First week of April, first couple of days of April. This line here, which would be late June, June 25th, would represent half the time consumption of this whole pattern from high to low. And what this is saying is, if that is actually the pattern that's occurring, we may be able to expect prices to be all the way down at 1800 basis the S&P 500 cash by the end of June. Well, that's a pretty big move from 2130 or 40. You're talking about 300 points or 15%. And if that occurs in a 2.5 month time frame, there's a significant profit to be made on a put option speculative trade there. And if you can get in on a one-day reversal, or right off the highs after a divergence pattern and the market turns down, you might be able to get a stop with 1%, 2% here, with potentially a 13% type of a reward. So you might be looking at a 6 or 7 or 8 to 1, or even more potentially of a reward to risk just on a equity or futures position or something like that, with a stop above the high. So those are some ideas on the trading here. What I'm going to be anticipating here is probably a move to new highs, at a bare minimum, probably a continued move higher up into, if we just click over to chart of SPY, we have an unfilled gap down, two unfilled gap downs here between 210.45 and 211-ish on SPY. So if we bring a horizontal line like right here to right here, or just some unfilled gap downs on the chart, we already filled this gap down here yesterday, so that one is filled now. But we have these smaller gap downs filled, so we might see the market continue high and come back up into these gaps, even if it fails to make a new high. But at this point in time, given the elevated sentiment readings from the call ratio and the potential for a still developing but incomplete pattern at play, I think the most sensible kind of conclusion here is that we're going to see a yet higher high and potentially a failed breakout there. If that occurs, what I think may happen based off of the anticipated next significant cycle point would be probably second week of May. So if we do see the market generally follow this pattern and move higher towards the end of the month here, I would anticipate probably a reactionary decline back towards this support level by the first half of May. Don't really want to get ahead of ourselves and do anything trading wise that doesn't have a stop loss or a solid option risk to reward ratio or that type of thing. So not necessarily want to make some speculation and then trade without any legitimate plan or confirmation. But there are times where if you're on track on a pattern, those are some of the most profitable opportunities in a market. If what you see is developing as a potentially strong portion of a move actually does develop, there's just a great profit to be made. And I want to show an example or two of markets where this happened recently. Probably the most notable one that I would draw a similarity to would be the euro. So let me find that here. So let me go back to a daily chart, see if we can zoom in here. So let me move to a 2-day chart. So I'm actually going to X out of here. Not X out, but kind of zoom in here. So this phase of the rise in the euro right here had somewhat of a similar contracting type of a bias, and I identified this in real time. I don't think I put anything on the blog on this, but I remember looking at charts on this day, prior to this day, looking at this as a potential failed breakout, and then we saw this huge wide range key reversal type of day here on May 9th of 2014, and I was looking at it as potentially completing this ending diagonal pattern, with the idea that this ending diagonal pattern may be completing a larger, let me even move out to a 3-day chart, may even be completing a whole larger upward section in the market. So not just completing this pattern here, but actually completing a larger, something like an ABC or some type of larger pattern. And so the indication on that from a timing perspective, given the ideas I just shared with you, is that let's say this ending diagonal began at this point right here. If we use that same measuring tool and say, okay, so from low to high, did this come down and retrace the whole pattern in about half the time? And it did. It actually retraced back to this low here in almost exactly half the time. If we look at that pattern developing from this low down here to the final pattern, we actually see, or the final completion up here, we can actually see that price actually did come back down below this low and slightly less than half the time from low to high that it took to form. So we did have directional, consistent market action that it only took about half the time as that final phase of the ending diagonal took to form before price came back down and broke that level. And that was a pretty dramatic move at that current time. And another thing we could maybe use as just an indication here is if we look at just the whole pattern from here, from low to high, we can see that in less than half of the time that this whole phase of market development took, we did see price come down and break that low as well. So if we use that simply as a template for the potential type of price action, if we do see an ending diagonal occur here in U.S. stocks, the indication would probably be that we are going to see a bull market top in stocks, and we will see a somewhat extended downward move that will begin with a bang. It will begin with a very directional downward period of price action. So just to give kind of look through this again here. If there were 2 points I would say where I feel like patterns may have completed in the market, certainly we could give you the first one, which I just laid out here, which is this low to this potential final high, and be looking at the market possibly being all the way down here by the end of June. But if we look at this as completing a larger pattern structure in the market, I think the previous pattern possibly completed here at this October low, where we had kind of a triangular activity with an upward slope, and then price kind of broke away here and persisted to the upside. So if we look at that as the beginning of a kind of final phase of market action, that might suggest that by the end of the year we see prices all the way back down here at the 1650 level, which if we come off of 2150 down to 1650, that's 500 points, almost a 25% decline by the end of the year. Now that sounds relatively dramatic, and I'm not necessarily forecasting that, though I think that that is a potential forecast, though the first support level this needs to be tested is going to be this 1970 to 80 level here, and I think for a shorter term trader and a more solid short term just support and resistance from a chart standpoint, if we do see a divergence maintained here, we see a lower high in new highs in the market, lower highs in breadth. We see continuing bearish divergence in price. We see volatility like VIX divergences, put-call divergences. If this just shows itself to be a very weak breakout, and then we see some type of a reversal bar, final tops often end with a bang, so I wouldn't be surprised to see a little bit higher volatility, wider range reversal occur here if this does complete an ending diagonal, probably with a little bit more of a kind of intense or wider range candlestick here, as opposed to maybe what we saw at the top of this level here. That would be my experience or anticipation in any case. So that's really what I wanted to cover today, is just give a heads up here that I do feel like we'll probably see the market generally higher for a couple weeks, but to watch a breakout of this high as a potential kind of smart money selling point. And if you do see a very weak or modest break followed almost immediately by a significant bearish engulfing pattern, shooting star pattern, dark cloud cover, even just in bar chart standpoints, just kind of your key reversal day, like an outside day with a low close, any of those types of one-day reversal patterns after a bearish divergence in internal sentiment in the market, that I would suggest that would be a time to exit longs, and would actually be a very quality speculative point to enter short positions, because of the kind of contracting bias of this pattern, indicating a probably explosive downward move if that bias is fulfilled. Okay. For a more conservative trader, another option is, let's say we do see that, but you're not sure, but you're still willing to potentially trade the market if it does continue lower, is you just use this lower boundary of the wedge as a kind of a trend line, and then if price does reverse here, kind of fulfills this expectation, comes down and then closes below the trend line, then you could initiate the short at that point with a stop above the above the recent high. So your risk would be greater, but you have greater confirmation from the market that potential completed phase of action occurs, and you still may have a 3, 4, maybe even higher than that risk to reward if you're looking at, certainly if you're looking at this as the price target, but even if you're looking at potentially this as a price target, you may be able to get between a 2 and 3 to 1 reward to risk if price comes down and breaks this trend line somewhere in this area here, and you have your stop there and your target down below the January lows there, or the December and February lows right in here. Okay, so that's my take. If you have any questions on this, go ahead and just leave a comment. I'll post this on YouTube, but also we'll link it on the blog there, so you could comment in either section if you have any commentary or desire any further analysis on this pattern. Okay, have a great day. All the best to your trading.